Okay, ladies and gentlemen, so today's session is going to be focusing on how to scalp the VWAP. We're going to be looking at how you can use it with the hybrid system. We're going to look at other things that we use in relation to what I do when I trade. And there are other platforms that I use just so that I can take advantage of certain scenarios that are presenting themselves with the hybrid system. Okay. Now, some of you may be familiar with the conventional VWAP that we use in the videos. Now, if we zoom out, you can see bright as day that this is the weekly VWAP. And I always use the VWAPs on smaller time frames. This is the weekly VWAP right here. Okay. Now, with the VWAP, you're given, in essence, you are searching for the context. Okay. What's the story right now? Well, the story to me right now is saying that Bitcoin is currently sat at the weekly VWAP and it's moving away from it. Happy days. So we would be of the idea that if Bitcoin can move away from the VWAP, we would assume volatility is going to come in to edge Bitcoin higher. Okay, cool. Now, what if we are not trading Bitcoin? Or what kinds of VWAPs should we be using? That's the question that you guys are thinking. Whatever VWAP you use, we have to understand what it means if the bands themselves are in a certain shape. So principally, this is the standard 3 deviation, standard 2.5, standard 2, or standard 1.5. It all depends on what or how many bands you have. Okay. Now, if we go into the standard of the actual settings of this, all right, you've got standard deviation 1, standard deviation 2, standard deviation 3, standard deviation 4. Okay. Now, usually standard deviations can go from 0 all the way to 2. So it all depends on what style of standard deviation you're looking for. But the rule of thumb suggests that when you are trading towards the higher bands of standard deviation, it means that you've moved away from the mean. That means the deviation has come in. So how do you identify deviations? So you go here. Here's the first deviation right here. That's a deviation away from the norm. There's another deviation right there, moving average. So we consider the VWAP as the standard, okay? Deviation is when price moves away from it, up or down. And then a practice would be to find those standard deviation points. So here's another standard deviation region. It's moved away from the norm, okay? We go back again. Here's another one. Standard deviation has come into this area here. We move away again and we find more. This is a good practice to get you aligned with how you can train yourself to be aware of what's going on in the marketplace, okay? Now, these are weekly VWAPs. All right, and you can see that as long as Bitcoin stayed beyond the VWAP right here, it traded away from that point for the rest of the week. So even if you were to wait for Bitcoin to show certain interest at a particular point in the VWAP, you would pretty much have your trend in that setup. So look at this. Here, Bitcoin couldn't get above the VWAP. We could see with the confluence of the hybrid system on the smaller timeframes, we had Bitcoin moving up. They formed the number of things. First, they created an M formation. All right. They also created the FTD play, which is right there. Now, FTD is fool the dealer, F the dealer. In other words, the dealer's trying to trap you into the idea of buying into the dip. And this is where he traps the traders. Upon closer inspection, you can see that there is a little bit of a story going off inside of this zone. Now, at this VWAP point, we're assuming that is Bitcoin going to see this as a point of resistance. Notice all the green vector candles that come into the chart right here, which are suggesting that market makers trying to mark price up. Now, the green vector candles that moved price up didn't really gain much ground. Look left and you can see they couldn't even take out the previous high up here. So contextually, we are assuming that Bitcoin has found its resistance because all of this pushing up has led to nowhere. So then we look into the chart and we say to ourselves, so where are we? Well, right now we're at the mean. We're at the standard mean, okay? We've yet to have a deviation away from the point, whether it's to the upside or to the downside. What you're looking for This here, that's not a standard deviation away from the mean because it hasn't taken anything. You're looking for these points in the VWAP. You're looking for price to come to this zone. You're looking for price to come to this zone. And you're looking for price to come to this zone, whether it's to the up zones or to the down zones. Ultimately, price does something at these points, but it's not always guaranteed. Like in this instance, you can see they came down to this point right here. Okay? So they hit that standard deviation band right there, couldn't make it towards that point, and then they moved away and came back into the norm, which is the VWAP. They also did the same right here. So that area could be acting as an area of support and resistance. So you can see they came into that area, tapped it, and then they moved away from it. The next time they came back into that zone, which would appear to be an area of support, they broke down and they continue to rip lower into the next bands themselves. Now, you can use the volatility bands, or should I say the standard deviation bands, as support and resistance. The same way that we use volume profile, value area highs and lows as support and resistance. But if you were to just base it off the idea that when price is at the VWAP, if it can maintain itself above the VWAP, you're going for longs. If it can maintain itself below the VWAP, you're going for shorts. Because ultimately, when the institutional traders like to build positions, they get them above the VWAP, which is the sells, and they get their longs below the VWAP, which is their buys. Okay? Now remember, if that principle was right, we would then assume that they have been building their longs below the VWAP and then they sold into them and they got ever so slightly back up above. They came back into the same zone that they started to buy from and they repeated the same process again. You then look at the chart and you say, okay, so what were my confluences? I had the VWAP itself right here. I had the green vector candles that I would be expecting them to come back into, which is suggesting to me that the market maker has marked price up. The algorithms have all lifted price to get those orders closed off what they built up over here, and then they will repeat the same process, and then they ripped it back down again. They stayed beyond the VWAP itself, and then more volatility came in. Now, what you will find is usually when they go to the certain volatility bands, they're usually going to try and continue in that zone if the momentum does develop and goes in your favor. In other words, look at how it come back to this point, bounced away, came down again, bounced away, but then worked again that zone, bounced into that area, came back, bounced into that same area again, but bounced back. You see, and you look left and you see the vector candles. You're anticipating that if they've traded away from the VWAP for some time, they're naturally going to want to come back up towards it. Now, that doesn't mean they necessarily have to go straight towards it and be on the VWAP straight away, but you could guarantee that if they do hit a zone and they don't actually succeed beyond it, then trading back into the VWAP, or the logic is to trade back into the mean, you're going to see some success with that. All you need to do is look left and you assume that the vector candles right here are likely to be recovered. What would you be looking for structurally? You're looking for a little W formation right here. Happy days. They marked it all the way back up. Go back in the charts and try and replicate this exact same scenario of what you see right here. Try and go back and find one. We can go back and find one ourselves, and let's look at it from the longs perspective. Here we go. What have we got? Same story. Price is at the VWAP, okay? They're coming down, they come back into it, they go above it, they come down, they go up, they go down. It's treacherous. Where is the clear definitive direction? Okay, so they broke above the VWAP. So we are assuming now that the market favors higher prices away from the VWAP itself. What happens? They come up into the VWAP volatility band itself. Happy days. One would assume that that is an area of resistance. So then we would mark off the chart that zone. So we get our lines, we mark across, and we would assume that if price has the capacity to hold above the VWAP alongside the logic of the moving averages, we would then expect price to come back up into that zone because they favor higher prices after this aggressive move up. We look right and you can see they did exactly the same thing. They moved back into that zone. They covered that area. They moved towards the next volatility band where they found resistance, and they did exactly the same thing again. The logic that we just spoke about. They moved up, they held the moving averages, continued to ride higher until they kept on going up, and they kept repeating this same process process of riding the volatility band, and they kept moving up until they came to a stop in this area, and then they went one more time and spiked, but this time they couldn't succeed above the higher bands. This is the next point you want to be careful of. When you see a movement happening and it just keeps on going up and up, the more time it spends closer towards this band right here, okay, the more likely it's going to continue to go in that direction. However, the second it consolidates and then price moves back up again, as you can see here, it can't make the second to last volatility band or the standard deviation band. It can't make it. So that would then suggest that volatility has slowed down, because if the volatility was going to be remaining, then this area here should have continued back up. As you can see, they should have continued to move higher, which is then it would have been consistent with higher moves. Although price did go up and take that zone, you were getting the heads up that it might not continue because they couldn't succeed above this band here and, of course, in this band. That's what you're looking for. Some people will wait all day, all week to wait for this sort of play because it improves the odds of a trade playing in your favor when you see that price can't make it into the higher bands after an aggressive move. Now, given that being said, if you were to go short from this area here, you would have caught yourself a lovely $1,868 move in Bitcoin. That would have been a handsome short if you were running any leverage, okay? Now, the same policy applies on various VWAPs themselves. You can change this and go to the weekly. You can change it to the daily. You can change it to the custom. You want to mess around with different styles of VWAPs? Happy days. Try and keep it as simple as you can. But the first rule of thumb is you use the VWAP on the smaller time frames. Have a high VWAP, so that's the weekly, and you use the 5-minute time frame or the 1-minute time frame to establish where you are going to trade towards. Now, remember, only last week I was talking to you about the styles of VWAP that you can have. Okay, so you can have a high volatility band. There's volatility band 2. There's a volatility band 1. There is the VWAP, and then you've got volatility band 1 and volatility band 2. When price moves up and down like this, this is what you call a rotation. All right? So there's no volatility because the VWAPs themselves, or should I say the bands, they are not edging upwards. Okay? They're not edging downwards. All right? That's what you're looking for. Now, let's say you've got volatility bands that are doing this. What is that suggesting to you? That is suggesting to you that there is a trend. So the logic would say that the momentum is lower. So if price is here and it comes up, you're expecting it to find resistance at the VWAP or resistance at the standard deviation bands. In other words, only a news announcement or a freak move would change the direction of the standard deviations, but you hypothetically wouldn't be trading inside of those zones. You wouldn't be trading in those times. So logically, we would use the standard deviation bands as support and resistance. So if the market's going lower and you see price working its way up towards standard deviation 1, standard deviation 2, you know that you have got two options. You can either run one short from here or split it and run one short from here and anticipate that it hits this zone right here and you run another short and then trades back into the VWAP. That is in principle what you are looking for. The same for longs. So if price is going, so if we go to the upside, imagine that we've got our volatility bands and they're doing this. All right. So there's the standard deviation 1 and 2. There's the VWAP itself. And then you've got another standard deviation band there. Wait, don't do that, Tino. Tino, what are you doing? There we go. And then standard deviation band up that way, and then standard deviation 2. Okay, so here's price. So we've got price going up and down, then it starts a new session, and then here we go. VWAP, down, up, down, up, down. Resistance, down, up, down, up. That is trend, okay? So then you would then say to yourself, right, I can either use the standard deviation 1 down here as support, trade back into the VWAP, or trade into the VWAP, take half of my profits, trade towards the next standard deviation band. Okay? As long as you are making sure that you've got the commitment and say, right, if I run longs on this standard deviation band, I will trade back into the VWAP. And that's on the logic that it does come back down into that point. What if it holds at the VWAP? So where are you trading towards? You're trading towards the next higher bands. Yeah? You're trading towards the standard deviation 1. You're trading towards the standard deviation 2. That's where you're trading towards. Okay? Always use the smaller time frame. So let's just go over to BTC in the place to be, given that it's running up to 24.9 we see. Hold on. There we go. So where are we right now with Bitcoin? Cool. Let's make a projection. What do we know? What do you see? On the logic that I've just given to you, what has Bitcoin done? Or what is Bitcoin doing? The word rotation is coming to mind, isn't it? Why? Because our standard deviations are flat. Look, there's nothing happening. It's flat. So this, in principle, is a scalper's market. Is that because news announcements have come into play? Maybe. But it's a scalper's range. We're at the VWAP right now. We can't even get ourselves in towards this area. So the logic would suggest that if Bitcoin comes up towards this zone, we could run a short from here. That's the principle. Okay? So we say, okay, we run a short from here. We look at the vector candles and we say, okay, how logic is that? How does our logic sound with that? All right, cool. I've got vectors down here. Cool. Where are my vectors? Well, there's the VWAP. Look at the VWAP. Okay. Have we tested the daily open? We have tested the daily open twice. We've got the one zone here and we've got the one zone here. Logic would suggest that we would expect another test because we didn't get the test right here, but that could be a sign of support right there. All right, then. But I've got green vector candles here. I've got a blue vector candle wick, and I've got another blue vector candle right here. Where am I? Okay, well, I can't get above this band right here. So this is my absolute utmost area of resistance for the time being. I look left, and what do I have? I've got some vector candles all the way up here towards this volatility band, but quite frankly, I don't see Bitcoin actually making its way up towards that zone as of play. Okay? Now, if you really want to get technical about things, you can assume the midpoints between the VWAP on the weekly and the next volatility bands. Now, I'm getting really technical with you here, guys. Okay, you might want to watch this again. So here's an example. Take the VWAP. The current price point of VWAP is right here. Okay, go up to the first VWAP point. Okay, that's the midpoint of the VWAP between the VWAP and the first standard deviation zone. Let's take the next zone. VWAP, go all the way up towards that point. Okay? Takes that. That's the midpoint right there. From the low all the way up towards that high right there. Okay, cool. Then we go again from the VWAP. We go all the way up towards that point. Okay then, cool. Now we have 3 particular zones that we can trade from or towards. Okay? Now, the logic would assume that if Bitcoin comes down towards this midpoint between the standard deviation zone 1 there and the VWAP itself, if it can hold this point, I would then naturally assume that the momentum is going to continue and work its way up. Why? Because there's a development of volatility. So only the next area or the deviation away would have to build steam. So you would naturally assume Bitcoin would come back down and then try and work its way back up towards the next zone. Come back down, work towards the next zone. Okay? We use these points to work out how likely price is going to move in a certain direction based on the chances of momentum continuing towards each volatility band. Okay? It's an assumption. It's nothing indefinite. But we use these levels as potential profit targets, potential stop areas of support. You're adding confluences to confluences. You trade towards the bands, trade away from the bands. Look, Bitcoin couldn't get anywhere against this area here. Okay, so that tells me that this area at this price point could be a point of resistance because it couldn't quite make it from there. And it's tried to move up, couldn't make it. Okay? The VWAP hasn't moved itself. I've got some vector candles down here. I'm now looking to see if it can test that 0.5% region right there. If it can hold that point, then the confluence of the 50 EMA on the moving averages and the 200 EMA could act as areas of support. Happy days. Trade up towards that point. Once it gets towards that zone, you're looking for shorts because the logic suggests once the volatility comes in as a standard deviation zone, they've moved away. So they've deviated away from the norm and then they pull it back down again. I hope that makes sense. You might want to watch this back again. Now, there is another VWAP that you can use. And this is for my scalpers, like the crazy scalpers of the hybrid system. Okay? This was created by a gentleman called Adicum. Now, you know who Adicum is, ladies and gentlemen. Mad love to you, Adicum, for this. It's called GeoSession VWAP Third Standard Deviation. My settings are as follows. Show the session standard deviation bands, all right? And you can show the daily standard deviation bands. When you don't show the daily standard deviation bands, this is what you get. It's the VWAP for each session. Now, it can cluster your charts a little bit too much, okay? But you've just got to be aware of what to do with these bands. So, it's not really helpful looking at it on the 5-minute time frame. It's when you start getting into the lower time frames, and even on the 1-minute time frame, it's too much for me. I can't watch it on the 1-minute time frame. I have to watch it on the smaller time frames. Now, for some of you, you may not actually have the pro version of TradingView where you can access the 15-second chart or the 13-second chart, but let's assume that you can, because you can still use it on the 1 minute. My preference is the smaller time frames, okay? Now, let me just work off the 1 minute to put things into perspective, okay? This strategy or VWAP is understanding the importance of each session's VWAP. You go back in the charts, ladies and gentlemen, you are going to see some magic with these VWAPs. This right here, news play. Don't want to do it. You waiting, in principle, for price to come back towards the session VWAP and away from it. That's all you're looking for. So here we go. Here is a session. Asian session. The green line is the VWAP for Asia. The yellow line is the VWAP for the UK. And the blue line is the VWAP for the US. Yesterday or Wednesday was a little bit of a tricky day in the marketplace for Bitcoin. So it's a little bit crazy in Bitcoin. But I'm telling you now, this VWAP on assets like Euro, wow, what an indicator. What a confluence. Look at that. Here are the opportunities that you can trade with this. It's exactly the same principle that I just gave you. Exactly the same. Nothing different. It just shows it you in a different way. Okay? So you're trading from one session VWAP to the next. Look at how the Euro's session VWAP has been continuously rejected. What's it suggesting to you? On the 1 minute time frame, the VWAP is trending downwards. So we've got movement. So then what do? Here are your opportunities. London session VWAP resistance, bang, happy days. London session VWAP resistance, bang, happy days. London session VWAP resistance, bang, come down. That's what the logic is suggesting. You scalp from the VWAP. Now, it's important you understand this bit. Each session, it takes a couple of hours for the VWAPs to fully form. Okay? So tonight, when you're looking to trade, the VWAPs won't present themselves before the Asian session. It's when the Asian session starts, that's when you get the first reading of the VWAP itself, okay? So here's the session right here. At 1:30 in the morning, roughly, that's when they start printing the VWAPs. Look at this gap right here. Where is it? See that gap there? That's where the VWAP finishes. And then this is where the VWAP starts. All right? You don't trade that zone. That's the logic. All right? Now, again, the same logic applies. I mean, look at that. Look at these little quick scalps that you can take. Look at that. Resistance at the London VWAP. Come down. Confluence. Vector candles. Recovery. Bang. Standard deviation zone right there. Okay. Do we assume that's going to be an area of support? Or do we assume it's going to be an area of an area that they're going to break down into? Remember the logic of what we said earlier on. If they go into the one band and find support in that area, they'll try and go back into it again because the volatility is present. What does then that suggest? It suggests that price, in principle, should be coming back down again to test these standard deviation zones. We look left and we see what have we got? Oh, we've got ourselves a nice little vector candle down here. So mid-term, short-term projection of euro would be to come back down towards that 105.9. That's what we would project it to do. Why? Because the cycle of the VWAP is showing you that it's dropping from one point to the next. Deviation, standard deviation. Deviation, standard deviation. They go back into the norm and move away from it. The New York session itself, one thing you will find, okay, is when prices hit these volatility bands, these higher bands themselves, at some point they're going to try and come back and test that VWAP. So here's an example. Look at the Asian session. This green line right here, look at that. That's the standard, that's the VWAP for the Asian session. They work their way up into the volatility bands. You know full well that you're going short from these zones. They then brought it all the way back down, recovery of the vector candles, retrace, continuation, found the test of the VWAP right there. 2 trades. One from there comes down and one from the standard deviation line right there, which would be the 1, okay? And then they ripped it back down to test the VWAP. They always brought it back into the VWAP zone, okay? Now, of course, as you start, some of you guys are already using this, but it's the same policy with VWAP right here. Look, it's all the same. That's just on the weekly. If I were to change this weekly VWAP and then you've got this VWAP session VWAP itself, you're laughing. But remember, this session VWAP is for scalpers. Look at the New York session over here. Look what they did on this. Right? There we go. There's the New York session, the blue line right there. They came away from the zone. They showed up to the VWAP. They found support. They tested the VWAP, found support. And what time was that at? That was at 5 o'clock. London closed, ladies and gentlemen. Shift out away from the VWAP, trading up towards the next bands. Okay? You're looking left and look at the structure previously right there. Cool. And then you've got trading away from the VWAP. So if you were to just run along on the logic that in the New York session, they would stay above the New York session VWAP itself, happy days. You would have realized the return and you would have made a fat bag on that move to the upside in euro. You would have been able to catch that bad boy. Okay? And then prior to that, after that, they did not touch the VWAP since. They didn't even go back into it. All right? So I hope this makes sense to you, ladies and gentlemen. Okay? I think Adicum has shared this standard deviation VWAP thing. But the principal information regarding the VWAP is this. The first thing that you do, okay, is you wait for the VWAP to develop. The same way you wait for it for the Geo session. Wait for the VWAP to develop, okay? So the best time for you to trade it is when you trade in the London or the New York session. Wait at least after the first hour of London to open so that you can get a feel for how the VWAP is presenting itself, okay? Make sure that you can establish a trend in the VWAP. So if we just go back into this, you can see, what have we got here? There we go. There. So, UK session. You see at the start, there's nothing going on here, right? Go into smaller time frames in euro. And this was the short that I took yesterday. No volatility. Okay? The VWAP, London, the yellow line, can you see it? It's not doing anything. So what am I looking for? Well, I'm looking left. I know there's vectors. I go into the higher time frames. I know there's vectors down there. So I'm trading towards those vectors. Why? Because if you look at the VWAP itself, rotation, it's not doing anything. There's no volatility. And it can't get above particular VWAPs. If I just hide that one, you see the standard deviation VWAP right there, can't get above it. Look at this one. So you run a short. So if euro can't get above this area right here, then I'm only favoring shorts. You switch that bad boy on, zoom in. No volatility. Then it starts to move. Precedence has been set. You place your trade and you see if you were right. The only way you're invalidated is if it gets back up above the VWAP. And you would have been able to rinse that bad boy off. And funnily enough, look what they did in the New York session. They came back into the London VWAP. Right there. Now, I believe you can set that into the settings itself. Show daily. I believe that's right, I think. No, I don't think you can, but have that as a measure. They came back into the London VWAP. Found the New York VWAP support. Came back and tested the London VWAP. Resistance from that zone. But then they continued back up. So always determine the style. Always determine what the bands are doing. Are they flat? Have they got curvature? You trade in the direction of that curvature, whether it's to the downside or to the upside. You use the VWAP as an area of where price can bounce from and show support or resistance. You use the standard deviation bands as potential profit targets, okay? And, of course, support and resistance. So if price is coming down, they hit this area, you run along, you trade into that first band, okay? They've got success there. Trade to the VWAP, happy days, double profits, close your trade at the VWAP. And if they do have the more strength and it's going to continue up to the next band, you trade to the next band itself, find resistance there, come back down, up and down. That is all you're doing with the volatility of the VWAP sessions themselves. Look at this, same thing on exo charts. Your trade, here we go, rotation is doing nothing. Price drops to the second band, comes back down, can't succeed it, can't break the volatility band. That is very important. Okay, that means volatility slowing down. Run along, up to the VWAP. Happy days. Back down again. Volatility is not as strong as what it was in this area. Happy days. Run it back up to the next volatility band. There you go. That's how simple we can make it. But I know it sounds simple when I say it, but it's all about how often you practice doing it. Go back into the charts and see where you can take advantage of this. Go and mark off in the chart zones that you can short from, zones that you can long from. Look at the volatility bands themselves, the VWAPs. Look at how they're structurally shaped. Yeah? Look, today, this area. Look at this one. Rotation, nothing. Volatility comes in at the start of the day. We go closer. Man, S&P or NASDAQ couldn't get above that zone. Look, it can't get into that band. So you run a short from here. Where's your exit? All the way up here. Because it's shown signs that it can't get into that band. Yeah? Now remember, of course, price isn't printed in this area, but when price is coming up, the volatility band still presents itself as it gets up to here. I hope that makes sense, ladies and gentlemen, man. Please, if you've got any questions, let me know. Might have been a bit of a too much of a masterclass session on the VWAPs, but you can tell how you can exploit the movement, okay? Let's see if this comes into action. Right there. Mad love and respect, guys. Take care of yourselves. Peace.